But the two quality control questions is where we flip all that around. They could give you the tests they've performed and ask you, are they okay? Is there anything missing? That is effectively what they're trying to ask you. So again, it's being very, very clear. Is it right? Is it wrong? Is it enough? And then telling them what else they need to do. And it's very, very likely they'd have done stuff wrong and there's stuff that's missing. Okay. Otherwise, the whole question would be saying correct, correct, correct. The other part, which people get a bit lost in, is justifying the misstatements. That means where the auditor has found something, the examiner's given you that in an answer and said, I found this thing's wrong. Tell me why it's wrong. And people go, it's wrong, right? They already know that. They gave it to you. It's in the uncorrected misstatement schedule. So it's again about showing off your financial reporting knowledge, okay? And we've got one of those questions. I haven't done both for timing, but I have done a question on justifying misstatements. So think about how important is that item. The main thing we're really talking about in this webinar is why is it wrong? Why is that misstatement there? And they give you information around it that gets you to explain why it's wrong. So it's very, very clear that you know it's wrong compared to the risk questions where it could be wrong. So explain why it's wrong is the thing we're focusing on. But in terms of broader context, when you answer these questions, you will tell them how important is it? I.e., is it a material misstatement or not? Because it's on a schedule of uncorrected misstatements, which includes material and immaterial ones. And then you might discuss a wider issue. So like subjectivity, it might mean they chose to do it wrong, which you'll see in a second. And then if the question doesn't have a reporting impact that follows it, you can actually bring a little bit about reporting. Okay, but most questions we're justifying, then follow on with and assume they don't change them. What is the reporting impact? And I say most questions will then have some additional procedures you might perform, particularly with sufficient and appropriate evidence questions. But we're not covering that today. So how do we do these questions? Evaluate the matters that should be discussed. Sounds a bit more complex than just tell me why it's wrong. But that is what they're saying. And further actions, but I'm not covering that bit. So this is where, again, we've got a big scenario. I had to chop some of it down. But what we're really looking at is the bottom bit. There's a schedule of uncorrected misstatements. You can pause or take a picture of the screen if you want. There's a schedule and there's £25,000 that's wrong. Okay, so it's $25,000, sorry, that's wrong. And in particular, the reason, okay, the thing that's wrong is in the blurb below. It says they have investment properties and they use the fair value model, okay, but they said one of the investment properties had a investment value that was lower, okay, so they had to effectively reduce the value of that 25,000 by 25,000, but they said, no, we're going to use the other three at fair value, but basically because that one's gone down, I'm going to leave that one where it is. Now, let's be honest, we're probably going to guess that doesn't really sound like a choice we should have. So if you were stuck, probably you can guess that it was wrong, but you're not going to get all of the marks to be able to justify. So when you know it, okay, it's really nice and easy to explain. So this is where we have these asset rules that in AA were a bit more simple, but in here we've got investment property. Okay, particularly a revaluation was common in AA, but in here we've got investment property valuation, particularly fair value. So again, we don't need to read all that, but what we are reading is this bit. So let's start with materiality, which was my first thing I said in my approach. The uncorrected misstatement is below materiality, therefore it's immaterial. So the $25,000, we had a materiality level that they'd given us already. So great, that saves me a bit of time, but just it is immaterial because it's 25,000, not because 25,000 is below 40,000, because that's pretty obvious. Boom, I've got one mark. And then we talk about financial reporting. And in this question, yes, you can choose, but you have to apply the same thing. You can't pick and choose. They call it cherry picking. You can't say, yes, I want fair value for all the assets that have gone up, but no, I don't want it for the ones that have gone down. So they're all, particularly if we're looking at asset classes, investment properties all need to follow the same. Therefore, it is incorrect. Okay, I know we already know it's incorrect, but be very clear, this is the reason why it's incorrect. So we've got the reason, we've got our FR point, points in this case. And then in this one, we've got a wider issue because it says they've used it and they've made a choice. I'm a little bit concerned as to why they've deviated from those rules. So I've gone even further with my answer, which isn't the case in all answers. But in this one in particular, it's likely fair value is more appropriate because the value's gone down. So that's, again, that's a bit of a judgment, being professional skill. But also using that is a lack of integrity. There's a suggestion that they want to keep the asset values higher. Really important if there's a suggestion in the question for something else, like they're listing soon, or they're renewing a bank loan, or something like that. That's a really good way to link in management integrity and bias. And it could extend. And in this case, I didn't expect you to read the whole blurb, but you might have clocked, if you're a really quick reader, that the bank covenant required a 6% profit before tax. And that is why management integrity was really important here, because obviously the write-off of the 25,000 could have affected that 6% profit before tax. And that's a wider issue. It isn't the case in all answers, but if there's something there, particularly with subjectivity, and we have a suggestion in the question, then we draw on that as well.